Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. And in line with continuing to try to answer as many questions as possible and reinforce mastering the process and mastering your craft, we will continue to go through the process in the playbook and focus on the basic steps. The basics are what will help you identify the best trading setups, and it is simple. It is very simple. If you step back and take a bigger picture and understand we're not on the inside, we're not looking for reading every little bar movement and putting a name on it. We're stepping back and we're looking and hunting the best trade setups. We're looking at the euro. We'll look at a couple of instruments and we'll walk through the process. Key thing to understand is that when a new day starts, when a new week starts, when a new month starts, we have other time frame traders potentially entering into the market. It's a new time cycle, just like a new hour, a new session. It is a new time cycle, and that new time cycle may have a new template. So understand, I had a question from a trader that was a good question, asking regarding taking a trade setup on the day of the Fed. Would you have taken this trade in the U.S. session? And this was at the beginning of the New York Open. And the key thing to understand was no, because it's a Fed day. We discussed why that particular market, it was the Dow Jones 30, would not have been tradable until after the news, or understanding that the day is built going into the news. They're building a day, building a box of order flow. So the question then came, well, if there wasn't news later in the day, would you have taken that trade? You have to understand that that day itself is built heading into the news. The week can be built heading into non-farm payrolls, as we talked about with gold, the 3-day pump. We'll look at the euro, but whenever there's major red news on the day in the week that is a large potential high impact news announcement, BOE, non-farm payrolls, the Fed, those are high impact, major news release, high of week, low of week potential range trades, or even range expansions. So you can't hypothetically say what if, and because the day is built, they're putting blocks together for a larger, bigger picture move. So walking through the process, key things to understand: highs and lows of weeks. Highs and lows of weeks, because again, we will reinforce, I've received, even after yesterday's video, more questions regarding the day count and Monday, the opening range, and breakouts. Those are 3 separate entities. Key thing to understand is those are 3 separate entities, and we'll walk through the euro just again to master the process. Master the process. Repetition to master the process. We have a high and a low. When Monday trades on the euro, we break Friday's high. That break of Friday's high is a potential trigger for a session trade. We are not at the high of the week from the previous week, but we're at the high of the current week. We've taken out the high of Friday. So remember, a peak formation that fails, not just a trigger of a high or a low, but the breakout of a high and a low that fails. Heading into a new session, lower highs, lower lows is the formula for the pump and dump. This is heading into our New York Open on our day 1. So coming back to our overall template, we have a high and a low of week. We have a breakout that failed. So again, that starts our daily count. We have a breakout that failed on our Thursday at the high of the week on the euro. That starts our day count down. Day 1, day 2, day 3 is our Monday. And you'll notice on our Monday they broke Thursday's low, and on Monday took out Friday's high. So we spoke about this earlier, one of my mentors. We have false breaks and we have failed breakouts. When we're inside like this, we're inside of a trading range. These are false breaks. We want to identify markets that have volume trapped outside of a weekly range at the high or the low, that have traded volume and then reversed. And that, and by all essential accounts, in a lot of cases, could form a first red day or a first green day. But on our Monday, that now establishes our opening range. So again, understanding that's two different setups. We have a 3-day setup that gave a high of day sell opportunity on our Monday. But after Monday has traded, we now have an opening range. That opening range establishes the high and low for the week, the new week, a new template, a new timing cycle. We also have a market on day 2 that breaks out of our weekly high-low range from the previous week and reverses. We now have a failed breakout at the low of a week. A failed breakout at the low of a week. That forms our first green day on day 2, which now establishes our initial balance, first green day. First green day is a low of the day, low of the session buy opportunity if it presents itself. So we have our initial balance, which is our high and low of Monday, Tuesday. That essentially sets the new high and low for the week. In a large percentage of cases, one of those extremes will tend to hold. We have a market that now on day 2 goes vertical on the Fed and breaks out of our high-low weekly range. Now our initial balance, body to body, gives one full expansion of that range. So for traders who tell me that it's irrelevant and they don't need to understand that, that's entirely your choice. I'm giving you the tools in the toolbox that I use from the training that I've had, that I've pieced together, that have a high impact, high probability importance as part of my playbook. So we have one full expansion of the range, which on day 3 we get a breakout that completes that expansion before reversing and failing. In our gap time, lower highs, lower lows on day 3 after a failed breakout. So remember, hindsight is one thing. As one trader said to me, it's all great at hindsight, and I will repeat this. Hindsight pays, because if you can master the day count and understand the trigger days, the signal days, and then how that should set up on the day that you're trading for the session that you're trading, you will be able to identify the instruments that have a potential best trade setup evolving. Lower highs, lower lows. That is the formula for the pump and dump. One trader asked me to do a video on the pump and dumps. There are several on the channel. And I will say this again. Every video that I do, I review the pump and dump, because every single trade setup is either a dump and a pump, or a pump and a dump. Any trade that moves will culminate in one of these two. So the high of the week, day 3, we have no major red news on the calendar on that day. That market collapses and drops down. And on the close of that session, as I talk about in the playbook, we draw our consolidation. First red day. So we have a first green day that culminates in a 3-day vertical move coming off the Fed. So again, just to repeat too, we have a 3-day cycle. Doesn't mean that it's all necessarily going to be perfectly tradable. But if you can identify similar setups, as I mentioned, I group the Swiss, the Canadian, and the yen together as one group. I will stock those pairs to identify when one of those has a perfect setup in the session that I'm trading. I may choose oil over the Swiss franc on a given day, but out of those 3 U.S. crosses, I'll always be stalking them to establish which pair maybe offers an easy, low stress, easy money, best trade setup. So we draw our consolidation. We look for the simple universal criteria on that entry for a first red day high of the day, high of the session sell trade opportunity. We're heading into payrolls. Sorry, that was we had the euro refinancing rate in the U.S. session on Thursday. I forgot to mention that. Sorry, there was major red news for the euro. But on Friday we had payrolls. The pattern, 1, 2, 3, first red day collapse. Again, some traders, one particular trader felt that there should be a variation added into the playbook. If you look at page 105, I discuss the 3-day parabolic setup, and it's a first bar entry on the high impact news, because that will go vertical as opposed to a session high impact news where the market may spike or explode in one direction and spike and pull back and coil. When it's a 3-day parabolic setup, the setup is already there on the 15-minute chart to go vertical, to explode vertically. So it's imperative that when they give you the first bar entry, that trade is taken. I still hold my max stop loss. If we get a first bounce, I can add positions into that trade. So we had payrolls, we have our micro RM structure, we have our first red day high bull potential major resistance. So again, another trader asked, I didn't see that in the glossary. It is in the glossary. High bull, major resistance, low bear, major support. And all that is a potential level where the market may find resistance, which it did in this particular case. So the process. Stick to the basics. I will repeat it over and over again because it is as simple. It's the same thing every week. We can pick any week out. We have a high of a week heading into our new week on our Monday. They false break the high on the Monday right away vertically in Asia. Think about what they've done here. Right at the beginning of the week, they trigger breakouts. So again, I talked about this. Don't get fixated on just being stop hunts. They trigger breakouts. If they trigger breakouts at the high of Friday, where potentially may those stop losses be on the breakouts that they've triggered? On the first day, it's going to be at the low of Friday. On day 2, on the Tuesday, they may move them up to the low of Monday. And if Monday closes, and that's our opening range, but it's also a first red day on a Monday after triggering a false break of Friday's high, and again, we come back to trapped volume on Thursday. Trapped volume below the low, day 1, day 2, day 3, blows off in the direction of the trend, reverses. We get a first red day. That's our opening range. It's a first red day. First red day is a high of the day, high of the session selling opportunity. If it presents, we can mark off our high bull. We have lower peak formations. We can pick any level. We can pick Friday's high, Thursday's high, Friday's high, because that's where the breakout failed. And we talk about after the break in structure. We have a break in structure on Friday, lower highs, lower lows before the pump up. That break in structure then precedes the retest or the reversal back into level 3 before the collapse. So day 1, day 2, day 3, false break, first red day, high of the day, high of the session, short trade. If that's our day 2 now, Monday's day 1, that's our opening range. We have our initial balance. Okay? Initial balance. Day 3. We may get a short squeeze. We have a break in structure right off the bat in the Asian session, higher high, before they break down and give a micro W heading into our Europe session. We already have a micro W. This is the setup for parabolic 3-day setup for a parabolic short squeeze. Which is on page 90 in the playbook. That market then proceeds to take out the high of the week, low of the week to high of the week. Now on our Day 3, we're heading into the U.S. New York Open, and we are at the high of the week. So we're now potentially in a trading range. High of the week, low of the day. We take out the high or low of the London session in the New York model. Day 4 is an inside day. That's our Thursday, inside day. So we again have a high and a low on the inside day. We may potentially have an inside day opportunity, which is on page 69 in the playbook. So remember, everything's about timing. It's about when you come to the screen. It's not about me saying this is going to go up or down. It's about coming to the screen and asking yourself, do I have a setup? So when we have Asia trading, some traders may have tried to short this down from the high of the inside bar, maybe looking for the false break. The longer you sit in this trade and it's not collapsing, there's your first clue. So we have a market that's broken above the lower high, so we have a break in structure and a higher high. When we get a higher high, we redraw that, and the market again goes vertical in the Europe Open, and we have a higher high again, break in structure. Higher high, break in structure on the inside is the formula for the dump and pump. So we have two types of inside bar trades, the reversals, which typically will be at the high or low of the week, right? Day 1, day 2, inside bar, day 3 to the high or day 3 to the low. For a reversal explosive move, low of the week to high of the week, or high of the week to low of the week. We're inside, we're making higher highs, higher lows. We're at the low of the week. So again, coming back to where we have traded from the bottom of the week, we are now in a dump and pump scenario. Every trade will culminate in either a pump and dump or a dump and pump. So if you can't read it, or it doesn't make sense to you, or it's later in the session, this is the New York Open, perfect opportunity to be going long in the New York Open. If it's later in the session, late in the U.S. session, as I mentioned before, if they move it later in the day, get suspicious that they're setting it up for a larger move later in the week. So again, we would start our day count. The low of the week, day 1, inside bar, day 2, day 3, trend day, taking out the high of the week, and that is into our new weekly time cycle. High of the week, taking out the high of the week on our new Monday. So we have a 3-day cycle that had an inside bar. It's a 4-day move because the inside bar, which is still, we don't change the day count, but we now have day 2 longs in the market, and we've taken out the high of the week. High of the week, low of the day. Opportunity in the London session. Our new week starts, and we head into our same process. Opening range. Just coming back to our Monday. So again, I'll reinforce. You're taking a trade on a Monday needs to have a setup. That is different than the opening range for the week. Opening range now is established. We have a false break, not a breakout, a false break. That is our high and low for the new week. Day 1, day 2, day 3. High of the week, selling opportunity in the London session for a nice vertical collapse that breaks structure, pump up on major red news, New York Open, for the collapse back down to the low of the day. So I reinforce walking through the process, not chasing the price action inside, understanding the day count and understanding whether or not there is news on the calendar, understanding down low, up high, breaks in structure, pump and dump, dump and pump. Everything's the same week in and week out. It will repeat again this week. Look for failed breakouts. Understand that 3-day setups are different from opening range breakouts. And understand that day 1, day 2, day 3 breakout traders in the market is another entirely different setup. Focus on mastering the concepts, mastering the best trade setups. These trades are done and dusted. I'm not sitting in something for hours on end. I come to the screen, I'm looking for the instrument that has an opportunity to either collapse, where I can size into it and be done, or I'm looking for an opportunity where the market potentially may be going vertical. I'm not going to be trading the Fed, but we have a day 2 market. First green day is a low of the day, low of the session buying opportunity. Can't get it on major red news. We look for the first bounce. If it's a first bar entry on a 3-day parabolic setup, okay, again, day 1, day 2, day 3, they already broke the high, higher highs, higher lows, dump and pump. Not saying to trade the Fed, but the same patterns will repeat. Everything is fractal, and nothing new is going to be happening this week. It'll be the same thing over and over again. Ecclesiastes, there is nothing new under the sun. What will be again and again and again. Keep it simple, traders. Master your craft. Keep it going. Keep growing your trading business. Focus on the easy money and the best trading setups. Enjoy your weekend. Study hard. Next week will be your best trading week yet.